Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 6th of February 2020, so yep, welcome everyone. Welcome to this Thursday's afternoon session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. The content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute any invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so also just before we jump in, quick mentioning of our JFD YouTube channel here, so which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we update on a daily basis. And yep, I believe you can find a lot of useful information here, guys, for yourself, so feel free to visit us on jfdbank.com and click on the research page right here. Now then, let's jump into the charts. Now, the first one I want to touch on here is the Dow Jones Industrial Average. Now, yesterday we had another fantastic rally, and just let me quickly jump into a daily chart on this one, just because it's going to be a little bit easier. So, of course, overall, the whole trend is still to the upside, and let me just quickly draw this one here. So, I've removed all the lines in order just to kind of have a blank canvas here where we can paint our lines, and basically, we are still trading above this medium-term upside support line taken from the lowest point of June of last year. From the shorter-term perspective, you can see after the index found support near this level right here, near the 28,170 territory, it kind of rebounded nicely and pushed higher. And yesterday, it just fell shy of a few points from reaching its all-time high near the 29,373 mark. But looking at the cash index right now, we can see that the price is balancing basically just around this level, around the area. Of course, earlier on we did have a nice overshoot on the cash index. We did have a nice push higher here where the index managed to reach an area near the 29,525 30 zone, around there, basically around around this area right here somewhere. So in other words, it did already kind of test the upper bound here. If we look at this chart specifically on TradingView here, it did test the upper bound of the Bollinger Band, and looking at, like I said, looking at the current price, it is balancing around this area. But in other words, we will have a nice opening gap here to the upside. So we, as you can see, we have these nice runaway gaps here. So 1, 2, and then we're going to have a third one. Now the big question here is, will this actually lead to a nice reversal at some point, or is this actually going to continue traveling further north? For now, of course, given the current situation, we will stay a little bit more on the bullish side, but of course we'll be very careful in case, let's say, the news surrounding the coronavirus comes out in a more negative way, that they are negative right now, but as we can see, the market seems to be ignoring that. So if there is something more serious coming out, then, well, we could see a nice reversal back to the downside, and if so, we could be getting ourselves a nice double top here. But again, that's too early to talk about that, in a way, to consider a double top pattern, we would need to see a drop below this area right here near the 28,170 zone. So this could be that neckline, but again, that's a bit of a big move to miss out, so that's why we're going to keep it short and simple for now. All eyes are on this territory here, the 29,374. If the index continues to drift above it, then yes, this is confirming a forthcoming higher high, and we could see this one traveling maybe further north. The big question for everybody, in everybody's minds right now, is, of course, will it hit the 30,000, the psychological 30,000 this year or not, or will it actually avoid that and reverse back to the downside? For now, everything's kind of leaning more towards this scenario, the upside scenario. So again, be very careful, guys. In case this suddenly starts dropping back below the yesterday's low near the 29,000 mark, then, well, I mean, this is where we should become a little bit more cautious, because or should I say, the bulls should be a little bit more cautious, because this in a way could lead towards maybe another test of this area right here near the 28,170 zone. So keep your eyes on downward. Gold. So gold, and also let me just jump back into a 4-hour chart. I looked at gold on Tuesday, and what I was saying, that if we get a break of this this area right here, this could increase the chances of a further move lower, but initially what we will be targeting will be the 1551 zone, or the area around the 200 EMA on the 4-hour chart, so which we got a perfect well, actually the area was tested, but the line was not quite reached, but still we'll take that as a good kind of result, because again, we were targeting this area only, we're not targeting any lower areas, and for now you can see that the commodity did reverse to the upside. It's now currently balancing around this 1563 zone. In a way, looking at all this picture, actually let's get rid of all the drawings now and probably look at this one fresh, give it a fresh look, and what we can see here, of course, still this this upside support line. Now it's a bit of a tentative one because it's a bit of a difficult to draw, so if we draw it this way, we can see a nice good test of this area here. This is basically this recent drop, or should I say yesterday's drop, did test this upside line, and this upside line, if we draw it this way, this one's taken from the low of the 12th of December. If you want, you can start drawing somewhat a little bit of a steeper one, maybe from the low of the 26th of November here, but again, all this is a bit tentative, so yes, we could keep this one on the chart just for the sake of it, but for now we're gonna keep an eye on this this short-term upside support line taken from the low of the 12th of December. You can see that yesterday we had a nice rebound from it. Now, even so, even though we did have a nice rebound, of course, all this kind of is still looking somewhat positive, given also the fact that we are still trading above the 200 EMA on the 4-hour chart. But to be honest, to get a little bit more excited about the upside, now we would like to see, of course, ideally a push above this barrier, above the 15.94 territory, but I do understand we could be missing out on a bit of a space here. Don't get me wrong, it is a little bit of a tricky one, this one here, because we also have something like this, and let me just quickly put this one on the chart. So we have ourselves a bit of a tentative one, of course, but nevertheless a downside line. So that's why this level here, the 1594, comes in much better than any other area around here, because in a way it could travel higher, but it could get a hold up near this this downside line taken from the high of the 7th of January. So something for you guys to consider in the future if you're looking for something maybe more medium term, and if we get a drop below this upside line, this short-term upside line, keep your eyes on the 1547 territory, which is the low of yesterday, because a drop below this area would also not only would place if let's say the drop happens this week, then it would be a new low for this week, but if it happens, let's say next week, then yep, it would be a drop below the previous week's low, which would confirm a forthcoming lower low, and yep, more sellers could see this as an opportunity to jump in. But also, in addition to that, we would see the price falling below the 200 EMA here on the 4-hour chart, and in a way, this would not look good for the buyers here. So in a way, it could increase the chances of a drift towards this upside line. So for now, long story short, basically keep your eyes on all this territory here. We are going to be somewhat a bit of on the neutral side, because ideally we would like to see a break above the 1594 zone before considering higher levels. And in terms of the downside, from the very short-term perspective, we would like to see a drop below the 1547 territory first, and only then aim for a bit of downside here in the short run. Jumping into a few pairs now very quickly, AUDJPY. Now I looked at this one recently as well, and basically the pair managed to stay above this short-term downside line taken from the high of the 17th of January. You can see that the pair yesterday drifted above it. And in addition to that, what I was saying yesterday was that, I've looked at the pair. I've looked at the pair yesterday in my trader's tea time, and what I was saying that if it fails, for example, to travel towards this 200 EMA straight away, it may go for a bit of correction, but we will keep a close eye on this 74 mark. So as you can see, this area here acted as a very good area of support. So for now, if it continues to hold, keep your eyes on it, because this could be a nice plateau for the bulls to step in again and drive this one higher. We could even see a push towards the this downside line taken from the high of the 27th of December, and yep, we would take it from there then. But again, like I said, how we could play this one out right now is, of course, given the fact that it already tested a few times the 74 territory and failed to move below it, this is of course a good sign for the buyers. But for those who are more on the cautious side, what you could do is just keep an eye on the today's high, which is roughly around the 74.39 zone, and if we get a push above this, well, I mean, this would confirm a forthcoming higher high. And also, if we get a push above the 200 EMA here on the 4-hour chart, then yes, this could be opening the path towards higher levels. In terms of the downside, pretty straightforward. We need to see a drop below the 73.44 zone before examining lower areas. For now, it seems that the upside is the more likely scenario. That is, of course, if the indices also continue to rise, because if the indices start reversing sharply to the downside, we could see an increase in the yen buying, and well, this could drive this pair back to the downside. So something to keep an eye on, guys, as well, in addition to the indices. And I'm talking about this pair, of course. USDCHF. Now, this one, I looked at this one recently, and basically what I was talking about was, I've looked at this one this week, and what I was saying, that to keep an eye on this this range pattern here. You can see that after the pair drifted lower in the beginning of the week, it drifted towards this 0.9623 territory, tested it, from which it rebounded and pushed back to the upside. Of course, the bulls are quite happy to see the fact that the rate is now above all of its EMAs here. The only problem here, of course, is the upper bound of this range, which is around the 0.9762 zone. In a way, we need to see a nice good break, and ideally maybe at least a close of a 4-hour candle above this barrier before we could maybe start considering higher areas. Until then, it's, to be honest, it's still very tricky in a way. If it holds, if this area holds, we could see another round of selling here, and we could see a drift towards the lower bound of this range. So basically, guys, keep your eyes on this barrier right now, the upper bound, and if we do get a nice close above this, then yes, we will aim for further move higher. The only thing is, don't get me wrong, this move, if we do get a move higher, it could still be a bit short-lived, because overall we are still trading below this downside line taken from the high of the around the 25th of April. So we'll, yep, keep your eyes on down, guys. GBPUSD. So very quickly on that, I've talked about this one this morning, and I'm not gonna spend too much time on it, but basically it's still the same idea as I've mentioned this morning. We need to see a drop below this upside line, and also in addition to that, a drop below the 1.2950 zone. So, but in a way, ideally we would also like to see a nice, at least a 4-hour candle close below this, because as you can see, the 4-hour candles keep piercing it through. Even today we had a drop below this area, but the bulls quickly pushed the rate back above it. Above this is 1.2950 zone, so that's why we would like to see at least a 4-hour candle close below this. And if we do see that draw, and if we do see that close, then yep, it increases the chances of a further drift south. Initially we'll aim for the 1.29 zone, and if that fails to withhold, then yes, this could lead towards deeper extensions to the downside. But again, for now, guys, still until we see that nice close, at least of a 4-hour candle below this, we're not going to really consider any downside. Of course, sorry, the other way around. We're going to consider the downside, but we are not going to get comfortable with any downside until we get that drop below this good drop below this 1.2950 zone. With the upside, it's pretty straightforward. We need to see a push at least above the 1.3064 territory, or even better, actually not the 64, but this one right here, 65, 66, but even better, a push above the 1.3110 zone could do the trick for more buyers. And the last pair for this session is going to be the euro dollar. Now, I talked about this one this morning, and perfect moves, perfect movement here. Basically what I was saying this morning, that initially what we're going to be aiming here for is a bit of correction, and this is what I was saying, that the correction might end near today's pivot and near this 1.1015 zone. So we had a perfect move higher. It did get a hold up around this area, and as you can see, this is where we had a nice drift back down towards this psychological or sorry, say actually below the psychological 110 zone, towards this 1.0991 zone. So the way we're going to look at this right now is, of course, we need to see a drop below this 1.0990 zone before we could consider further declines. And to be honest, as in the similar way as with the GBPUSD, we would like to see at least a close of a 4-hour candle below this 1.0990 zone before considering further declines. And for now, you can see that the bulls are really fighting it hard. They're trying to resist the bears here, but can they actually maintain the rate above this 1.0990 zone? If they can, good news for them. Maybe we could see a nice reversal here back to the upside. But if they fail, well, I mean, we could start considering the 1.0980 territory, which is the lowest point of November, or we could aim then for the 1.0966 area, which is marked by an intraday swing low. Yep, that's correct, by an intraday swing low of 9th of October. And of course, this is where we will reevaluate everything again. But for now, guys, all eyes are on, and let me just actually quickly highlight that level for ourselves here for our future reference. So that's the level that we're going to be keeping a close eye on for especially today and on Friday tomorrow. Because don't get me wrong, it may end up the day, let's say, somewhere around here above this 1.0990 level, and then because we have NFPs tomorrow, then we could see some more movement tomorrow. So something to consider as well, guys. If we don't get a good drop to, let's say, today, then maybe this could be left for tomorrow. So as we do have a big day tomorrow, so keep your eyes on this one, guys. Very interesting developments here, and let's see how this is going to play out. So I hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me tomorrow morning, as always, at my Traders Espresso, that's 7 o'clock GMT time. For now, I hope you have a beautiful evening, guys, and I'll see you tomorrow at my Traders Espresso, 7 o'clock GMT. Thank you very much, and bye-bye.